So clearly the markets have shrugged off the Ukraine-Russia scare, and we were looking at some ETFs yesterday, the RSX in particular, on options profits. We noticed a lot of put trades on hitting the bid in particular. So that lets you know that traders are taking advantage of that juicy premium. They don't expect it to move lower, maybe flat to the upside. And you notice that in the SPY as well. So the macro concerns are really shrugged off.
Well, they were. I think that the market continues to be kind of a volatile situation, like kind of a trading range.
Right.
But what we do is we really look at fundamentals bottoms up. We look at companies that have restructuring stories, that have M&A activities that are going to lead to better growth, that have margin upside, that have, at the end of the day, operating leverage potential.
Right.
And it may not be evident right now, but it's something that we expect to see in the next 12 months, to see some of these efforts really be rewarded. And so we, on the days that the stock market is down and our stocks get hit, we like to buy those quality companies where we have a lot of confidence in.
Right, and the market volatility certainly lended to that, and you were picking in the financials yesterday.
That's right.
USB was one of them, and financials have certainly been out of favor for the beginning of 2014, but this is a super regional, and you like them better than the larger banks for a number of reasons.
Well, I think you have to have a stabilization in the 10-year yield, right? And you really do need a steeper yield curve for USB to outperform. But I think this company, I expect that to happen, because I do think the economy is going to improve as we go throughout this year. It may not be evident right now, but I do think it's going to improve, and that will steepen the yield curve. And I also think it will lead, so you'll see better profitability, but I also think it'll lead to better loan growth. This company does everything better than most. And so it's lagged its group for all of last year by about 10%. It's lagged year to date, and I think it's a very attractive position for the long term.
And speaking of restructuring in the energy space, and we've spoken about this before, is Chevron, and you're really looking for the asset quality there.
Yeah, and I think what's interesting with Chevron is, so for the last couple of years, they've really been aggressively spending on CapEx on all of their projects globally so that they could return to that 4 or 5% production growth. This year, they're only going to do about flat, and so people are not that excited. But I think as that investment spend comes to an end, if you will, that you're going to start to see the operating leverage, the production growth, and I think the valuation is down 9% from its high. So I think that it's a very interesting story.
And finally, another contrarian play, because that seems to be your forte. in the consumer space, and again, you've been one of the early China bulls as well, getting more of that exposure and levering to China, Yum has been that play.
Yeah, Yum had a really hard year last year too. It also lagged its peers by over 30%, and it was because of the China supply issues, the chicken supply issues. I think that they've gotten a handle on that. I like what they're doing in terms of the margin story. They've actually upside surprised on margins and not really getting a lot of credit for it. And I do also like what they're doing here in the United States. I think it's a very competitive environment in the U.S. in the restaurant business, and I like Taco Bell and what they're doing and how they're growing and profitably. And so I think you have kind of a combination, a turnaround in China and some solid results in the U.S.
Okay, great. Thanks very much, Stephanie. For The Street in New York, I'm Jill Malandrino.